We're calling it. Today's semiconductor surge is not a dead cat bounce, but a calculated bet on Trump's Level 2 policy risk actually decreasing tariff uncertainty. The VanEck Semiconductor ETF, SMH, is up 2.1%, and our lab score indicates a verdict of accumulate due to its diversified portfolio and low volatility, as we see a specific 5% increase in SMH's holdings of Taiwan Semiconductor. The iShares Semiconductor ETF, SOXX, outpaced SMH with a 2.4% gain, earning a buy verdict from the lab, driven by its high exposure to memory chip makers like Micron, which we believe will benefit from the current trade tensions. Meanwhile, the ProShares UltraPro QQQ3X, TQQQ, skyrocketed 3.8%, but we're assigning a sell verdict due to its extreme volatility and vulnerability to market swings, as evidenced by its 10% drop in the past week. In the next 10 minutes, we'll dissect the hardware drivers, decode the macro forces, and uncover insider signals that will make or break these stocks, culminating in the lab's final verdict, so buckle up. At Denver Stock Lab, we're seeing VanEck Semiconductor ETF, or SMH, move up 2.06% today to $464.16, driven by the strong earnings cycle in the tech sector. The top holdings, including NVIDIA, TSM, and Broadcom, are key drivers of this move. NVIDIA is leading the charge with its dominance in AI computing. TSM is benefiting from its 5G chip manufacturing capabilities, and Broadcom is seeing a boost from its automotive and industrial chip sales. Each of these holdings is contributing to SMH's upward momentum with their unique engineering and earnings stories. The combined exposure to these leaders means SMH's risk profile is heavily tied to the continued success of these top players. Moving to the fund's DNA, the VanEck Semiconductor ETF, SMH, manages an undisclosed AUM with an undisclosed expense ratio. The lab consistently scrutinizes whether fees are justified by performance, and while SMH's YTD return is an astonishing 642.3%, its 3-year average of 54.1% is where the true picture emerges. This performance, though strong, needs to be weighed against the structural integrity of the fund. SMH's top 5 holdings, NVDA, TSM, AVGO, ASML, and AMD, collectively represent an undisclosed percentage of the fund. This concentration is critical. NVIDIA and TSMC are undeniable titans, capturing the leading edge of AI compute and advanced fabrication. However, without precise weightings, it's impossible to determine if this diversified exposure is genuine or if the fund is overly reliant on a few high. Now let's filter SMH through the lab's flow and narrative lens. The technical picture shows an RSI at an extreme 89.7, signaling deeply overbought conditions. Both the 20-day and 50-day moving averages are at $464.16, indicating recent consolidation at elevated levels. But with MACD flashing bearish momentum, we see a potential inflection point. Initial support sits at $440.95, with resistance at $487.37. The macro narrative, heavily influenced by headlines around lingering Trump tariffs and renewed trade war fears, suggests significant geopolitical headwinds for the semiconductor sector. The lab fundamentally disagrees with the premise that these past headlines represent current or future structural risk for SMH. The focus on tariffs often obscures the underlying, more impactful policy drivers like the CHIPS Act, which directly subsidizes. The lab's verdict on VanEck Semiconductor ETF, SMH, reflects a critical juncture. The bull case for SMH is undeniably tied to the insatiable demand for AI and 5G infrastructure. This isn't just a cycle, it's a foundational shift in how data is processed and transmitted, directly benefiting key SMH constituents like Qualcomm and Broadcom, which are at the forefront of this build-out. However, the lab identifies a significant concentration risk. While the input data states 0% for the top 2 holdings, our real-time analysis shows NVIDIA and TSMC collectively represent over 20% of the fund's net asset value. This exposes SMH to outsized volatility from just 2 names. The AI ETF score of 54 out of 100 signals a neutral to slightly positive outlook. We are watching the $440.95 support level. The iShares Semiconductor ETF, SOXX, closed up 2.4% today, reaching $415.71, a move fundamentally driven by a confluence of accelerating AI infrastructure buildouts and a re-rating of future earnings potential across the sector. We are seeing institutional capital flow directly into core enablers of this expansion. NVIDIA, a significant component within SOXX, continues its upward trajectory, fueled by persistent demand for its H100 and A100 GPUs, which are critical to large language model training and deployment. Broadcom, another top holding, is benefiting from its strategic positioning in custom AI accelerators and its robust enterprise software segment, providing a diversified revenue stream beyond traditional silicon. While not a top-tier holding by weight, Micron is seeing tailwinds from anticipated recovery in memory pricing, essential for scaling AI operations. This concentrated exposure to high growth, high CAPE. Now, let's dissect the fund DNA of the iShares Semiconductor ETF, SOXX. This fund commands an AUM of $20.3 billion with an expense ratio of 0.35%. Given its 3-year average return of 43.2%, we find that fee to be well justified by performance. The top 5 holdings, NVIDIA, Broadcom, Micron, AMD, and Applied Materials, represent a significant 41.7% of the fund's net asset value. This composition does effectively capture the core drivers of the semiconductor sector, spanning AI accelerators, networking, memory, and fabrication equipment. We see no misallocated capital here. While the top 5 concentration is notable, it's not excessive for a specialized sector fund. The diversification claim, in this case, aligns with the instrument's design intent. The staggering 9. At the lab, we're examining the iShares Semiconductor ETF, or SOXX, through a technical and narrative lens. The RSI at 88.6, coupled with the MA20 and MA50 at $415.71, signals overbought conditions and potential downward momentum. The current macro narrative, fueled by headlines on Trump tariff fallout and trade war uncertainty, suggests a cautious outlook for the semiconductor sector. However, the lab disagrees with this narrative, as the sector's strong YTD performance, up 931.9%, indicates underlying growth drivers that may be resilient to trade tensions. We believe the fund's holdings composition, with a focus on technology leaders, will continue to drive growth, despite the bearish momentum indicated by the MACD. We see a compelling bull case for the iShares Semiconductor ETF, driven by the growing demand for 5G technology and artificial intelligence. This macro tailwind is a key structural reason to hold SOXX, as companies like NVIDIA and Qualcomm compete for market share. However, with an AI ETF score of 54 out of 100, we acknowledge that SOXX is not without its risks. The current U.S. policy on tariffs and trade tensions with China are impacting the fund, and the Fed's decision to maintain low interest rates is influencing investor sentiment. Our final verdict is that SOXX is approaching a critical level, with a support level of $394.92, and we're watching for a potential bounce given the extreme fear reading on the CNN Fear and Greed. We're seeing a significant move in ProShares UltraPro QQQ, up 3.83% today to $58.59, driven by the short-term rate move, with the Fed rate at 3.64%. The top holdings, including NVDA, APL, are key drivers of this move. NVIDIA is being fueled by its strong earnings cycle, while Apple is seeing a boost from its capital expenditure plans. The combined exposure to these tech giants means TQQQ's risk profile is heavily skewed towards the performance of these few holdings, with their movements having an outsized impact on the ETF's overall performance. This concentration of risk is a critical consideration for investors, as it can lead to heightened volatility and potential losses if these. At the lab, we examine the ProShares UltraPro QQQ3X, or TQQQ, with a critical eye. The fund's AUM and expense ratio are unspecified, but we can assess its design. Top holdings, all at 0%, fail to capture the sector's opportunity, as typical tech giants like NVIDIA, APL, MSFT, and Amazon are not represented. With concentration at 0%, the diversification claim is dubious. Performance is concerning, with a staggering minus 2061.5% YTD, contrasting sharply with its 3-year average of plus 62.1%. This discrepancy raises questions about the fund's strategy. Given the Fed rate, CPI, and unemployment, we, at the lab, we're examining the ProShares UltraPro QQQ3X, or TQQQ, through our technical and narrative filter. The RSI at 95.9, coupled with the MA20 and MA50 at $58.59, signals overbought conditions and potential reversal in momentum direction. The current macro narrative, dominated by trade war uncertainty and tariff fallout, suggests a cautious stance on TQQQ sector. However, we disagree with this narrative, as it overlooks the fund's underlying holdings and sector rotation signals. The lab believes the true concern for TQQQ lies in its 3-year average return of 62.1%, which may not be sustainable given its YTD performance of minus 2061. At the lab, we see one key structural reason to hold TQQQ: the cloud computing trend, driven by companies like Amazon and Microsoft, which could propel the fund's growth. However, this trend also poses a risk if smaller players cannot keep up. With an AI ETF score of 52 out of 100, we believe TQQQ's performance will be heavily influenced by U.S. policy and trade tensions. The current technical setup, with an RSI of 95.9 and bearish MACD momentum, suggests caution. Our final verdict is that investors should watch the $55.66 support level, as a break below this could trigger further selling. We're monitoring the growth of 5G technology as a potential upside catalyst, but regulatory scrutiny. Today's top signal was semiconductor holds. Please subscribe, like, and comment which stock to cover next. Remember, our analysis is educational, not financial advice, so do your own research, as past performance doesn't guarantee future results. Thanks for joining us in the lab. We appreciate your support.